All right, guys, so let's talk about Tesla stock today, but more importantly, what Wall Streeters are actually saying in regards to Tesla and the auto union strike that's going on right now, how it kind of affects both, and are we going to see actual huge moves in Tesla? I agree, this completely works in Tesla's favor, but there is a little bit more nuance to this discussion than what the media or YouTube or anybody else is going to tell you. So let's get into all that today. And I'll let you know if I think there is a huge move coming for Tesla in regards to all this or not. Before we get rolling here, guys, thank you so much for the support. The new channel is off and it is running. It is doing great. Make sure you check out the pinned comment down there. I got a link to that new channel. If you want to hear about finance, retirement, entrepreneurship, a lot of stuff like that that's a little bit different than what we talk about here, make sure you check that out. It'll be the pinned comment down there. All right, let's jump into the video and see what these guys have to say.
And it's time for FOMO. So we are looking at Tesla, which has now turned negative as we are seeing some of the
Of course, they start off a segment with FOMO and then they throw Tesla into it. I guess it doesn't get any more cliche than using the word FOMO in a segment called FOMO and then throwing in Tesla, I guess. I've never actually seen the FOMO segment before, so I guess we'll see how it goes here.
I mean, I was just looking at the NASDAQ, the Dow at session lows here in real time. Tesla has reversed its gain, although it's still up 10% this week. So it's still pacing to be the best performer in the S&P 500, at least this week.
And I'm just comparing it to some of the other names that we throw in the bucket with it sometimes. You look at a name like, let's say, AMD down 4.4%. You got Meta Platforms down 3.5%. NVIDIA down 3.6%. So, hey, down 2/3%, let's call it. Not so bad when you compare it to some of its peers in that mega cap tech world.
I mean, no kidding. And the fact that it's been able to cling on to a double-digit.
So which is it, guys? I mean, is it a car company or is it a mega cap tech company? You see right there just kind of the confusion in regards to Wall Streeters and what they think and what they're saying. But more importantly, this kind of tells me that they are starting more and more slowly, not nearly as fast as we want it to, but slowly more and more coming around to Tesla just being a big, mega cap type company, tech company, not just an auto manufacturer only. Now, of course, you're always going to have folks that will argue that even whenever, cars are not even the vast majority of the revenue, whenever something else takes over as the revenue driver in the future, you're still going to have some folks saying, well, it's still just a car company regardless. And don't even get me started on Gordon Johnson or any of those other guys. They're off on another planet altogether. So, and that's kind of their stick. We've talked about that before. It's exactly what they do in order to kind of stay in the media, stay relevant, and continue to have their research put out there to the masses. So
Percentage gain this week. It's now extending its third straight winning session here. Or it was extending its third straight winning session here before then reversing in real time. But what is interesting to me to tie together the UAW strike with all things Tesla, analysts are saying that Tesla could be the big winner here of this deal. The Detroit Threes have already struggled pretty notably with their transitioning into becoming more EV focused. And now I was reading that Tesla actually will pay its workers currently pays its workers, 38% less than some of these companies. So Tesla, for years, has been able to fend off these unionizing efforts at its U.S. factories, which has helped it widen its advantages that it enjoys in the EV space. So Gene Munster, who's a man.
Yep, and you guys see it right there. Of course, we already know that there is, one, I don't even know if Legacy Auto is really trying to compete because they cannot figure out a way to do it profitably. That's what happens when you have a terrible balance sheet. You have terrible financials overall. You just can't, even if you could get a clean slate, just due to all the debt that they have in general, they couldn't afford to do it. And of course, with a lot of unionized workers and such, and we can, maybe we'll talk about it a little bit after we finish up the video here, but it creates a very difficult environment to where you're already behind the 8 ball. Even if you could wipe the slate clean and make everything even with Tesla, you're still behind the 8 ball because of those union agreements, because of some of the pensions and a lot of the other albatrosses that kind of hang over Legacy Auto in general. It makes it extremely hard, much less the pay increase that they're going to get this time. And you see right there, if they're able to pay a lot less per worker, they're going to continue to expand those margins further, especially since, the unions are going to continue to push those wages up further and further and further, cost of living adjustments for the retirements, all those sort of things like that. Now, we'll talk about goods and bads afterwards, but that right there is, we already know, that right there is Tesla's huge advantage over the competition. Even if we're not including the engineering and everything else involved in that. I understand there's a lot more than that, guys. But just looking at it from a pure business perspective, they're already at a massive advantage, and there is no way for them to really compete in regards to EVs or anything else that isn't already in place in regards to, legacy auto versus Tesla.
Partner with Deepwater Asset Management, said Tesla will emerge stronger from this. That he said that big auto is in a tight place when it comes to transitioning its business to electric, and the current UAW discussions will eventually result in a steep increase in costs that will further push them into the red. I thought that was such a good point because, I mean, Ford has been pretty transparent. Their EV business is losing billions of dollars annually. So this is definitely not the situation you want to be in when you're working on becoming more profitable, no doubt. We also did.
Also, remember, if the government continues to mandate car companies move towards EVs and Ford and GM and the others can't do it efficiently because they're being forced, don't be surprised to see government regulation and some government subsidies, some whatever the heck you want to call it, come in to rescue the legacy automakers. So don't be surprised. I don't have any inside knowledge. I don't have anything else like that, but I understand exactly how these things work. And don't be surprised if that happens in the future in regards to helping them compete with Tesla, and Tesla in regards to the way that they perform, the way that they're doing everything and everything else. They may not get the same leadway that a lot of the legacy autos going to get whenever those subsidies or however the heck they choose to do it, tax breaks, doesn't matter at this stage. I don't know what it will be, but don't be surprised to see it whenever it comes in the future.
Actually, Dan Ives, Wedbush's Dan Ives, say that if this strike lasts longer than 4 weeks, he was one of the several analysts I actually saw that highlighted that 4-week mark, it would be a major hit to the EV ambitions of GM and Ford near term. And for that reason, just continuing to propel Tesla's dominant position as the EV, I mean, really the EV name. I will say, I don't necessarily think it was ever threatened by a Ford or GM, but slowly chipping away at market share, which we have more seen overseas, really, with a name like BYD. But I would say this is an interesting story, the fact that they're actually turning some of these companies' pain into perhaps Tesla's gain.
It seems like no matter what, we somehow find a way to spin this as a positive for Tesla. Look, Tesla is going to be largely unaffected by...
It's funny how they try to flip the narrative. All she spoke was facts, but somehow it's just somebody creating a narrative to where this benefits Tesla when, no, I don't see how, the auto unions having to pay their workers more when they're already bleeding money anyways, somehow doesn't benefit Tesla in the long run, especially when they were speaking specifically in regards to the EV race and the competition trying to chip away or whatever. If they're losing money and they're going to continue to lose more money chasing EVs while Tesla continues to pump out huge profits through their EVs, that's business 101. That's not a narrative. That's not creating something out of nothing or anything else like that. So this right here is what we're going to hear and we're going to continue to hear. And I understand they're starting to call it a tech company now, but now we're right back to the other opposing narratives that go on in regards to Tesla stock and in regards to this sort of stuff continuing to keep some investors out of Tesla because of narratives just like this.
And that's huge for Tesla. It's going to be more the other companies come out weaker. Tesla kind of comes out the same. I kind of see it as a false equivalency, though, to look at this in the EV world between Ford and Tesla. Look, even if Ford had all of their cars as all electric as choices, I'm not sure that the customer of Tesla is the same customer who's looking at a Ford Escape or some other car that Ford makes, the F-150, for example. They're just not the same consumer. So I look at this and, if you're in the price camp and you make enough to...
They're not the same consumer segment yet is kind of the part he's leaving out there. Model 3, Model Y, Cybertruck, and whatever the heck the Model 2 or the 25,000, 35,000, whatever the heck the dollar amount's going to be, EV is also going to immediately compete directly with a Ford and with the Escape and a lot of other things like that. So he's neglecting the fact that those are right here on the precipice of coming.
New Tesla or a Tesla from the last few years, you're not really the same person that's looking at Ford vehicles. So the big question is going to be what this deal looks like on the other side for some of these companies, what they do to continue to stay relevant and competitive in this space going forward. But we've said all along, if Tesla's being priced as a car company, it's way overvalued. It's not. It's being priced as a tech company, and then you have to think about, okay, what kind of tech company is it? It's also inventing things in the battery space. It has investments into solar. It is not just the vehicles we see driving on the street.
I think that's exactly what I was going to say, and I think that's such a good point because, we make the argument that with its valuation, I think the bulls of this name say it's not an auto company. It's not a pure play into the automotive industry. So then for that reason, can we really say that they're going to benefit from a pure play automotive headwind? I don't necessarily think you could make that same argument because
I think you can. I don't know her name. Sorry. I think you can because right now that drives the vast majority, 90 something percent of all the revenue and bottom line profits is from that particular category. So I can absolutely draw a lot of equivalency for now, regardless of whether, we've had that debate before. Is it a tech company? Is it a car company? Is it more? Right now, when most of the revenue is generated from the cars, it is definitely firmly in that car segment category, becoming more of a tech and a software company and some other things like that, making that transformation to the next, kind of iteration of what Tesla will be. So I don't know. It just seems like she's trying to take the opposing opinion for whatever reason, and right now, not making very good points.
Sort of different veins of business at this point. So for those that argue this isn't a car company, then I don't necessarily think that they can benefit from the pure play car company's weakness. I mean, the name like Ford, GM trade nowhere near the same multiple as Tesla. Their performance on a year-to-date basis is not even comparable at this point. Tesla, though, is up 124% this year. They pulled back about 12% from their highs, which is a much better position than they were in about a week and a half ago, even with this nice jump this week, up 171% from their low. Tesla's a frequent flyer on this show because it sees such great volume. It always has news. We mentioned relatively light, actually, Tesla news today, but this name just sees such outstanding interest from so many traders and investors. And even with today's slight move to the downside, it's always a fun one to look at here.
All right, let me help her out a little bit. It's called It Gets Clicks and Lots of Eyeballs, and that's exactly what your network wants more than anything else in the world, is to have eyeballs on a network. And yes, Tesla always draws eyeballs on the network. Just like whenever Gordon Johnson comes on, he draws eyeballs with his absolutely ridiculous Tesla takes. He's made an entire career out of this at this stage, and he's going to continue to do that because he draws eyeballs. So that is Media 101. I don't know if she knows that, doesn't know that. I don't really care. Totally irrelevant at this stage. But the point being, yes, Tesla is going to continue to be a topic on your news story until we, the American public in general, or the world public in general, quit clicking on those articles, quit watching all the videos on it and everything else. And it is absolutely captivating to traders, long-term investors, retail investors, those on Wall Street. It's just one of those things. It's a name that's out there. I think that's almost by design with the way Elon doesn't want to advertise, puts himself out there all the time. It's just kind of one of those things that is what it is in regards to Tesla stock. But hey, yeah, they're doing it for clicks. Now, in regards to, is Tesla going to benefit big and make a huge move because of this auto union worker slowdown, whatever the case is? I don't think it's going to be a massive move. And if we do see a massive move, I think it's going to give back because the next quarter's earnings, because they gave us heads up, hey, we're retooling a factory. Therefore, obviously, the numbers from that factory aren't going to be nearly as good. Of course, we knew that was happening, so it's kind of already baked into the numbers a little bit there. But that's not going to stop the narrative that's going to be, oh, look, there's a slowdown in Tesla. Oh, look at what's happening there. Ignoring that fact, ignoring the fact that Elon's ignited basically a price war, which is going to really hurt margins in the short term, really hurt that EPS number in the short term. So, if we do get a run up from this, it's probably going to give back a good chunk of that run. I don't know for sure, but probably will, because when you go to those earnings, they're not going to be as great as they've been in past earnings, and Wall Street's going to conveniently forget that they had the factory shut down that was planned for retooling. There wasn't a problem. There wasn't anything going on there. It's not going to stop people from saying there was a problem or they're trying to hide something or whatever the narrative's going to be. But it's absolutely going to be one of those narratives that's going to continue into the future, and that you're going to, any sort of run we get is probably going to give back in regards to that. Do I care? No, just an opportunity short term for those that are continuing their DCA or whatever they're doing. Long term, it's going to be just fine. But kind of circling back to the union talk real fast here, when you have really, really strong unions like that, and you have a company that does not have financial flexibility at all, I mean, no financial flexibility at all, that right there is a very, very tough relationship, because regardless of what the workers are getting or what they're seeing, regardless of your feelings as to whether they should be paid that, shouldn't be paid that, whatever the case is, bottom line is it's going to continue to suck off and continue to kill those automakers and make them less and less and less and less competitive, which of course means they're going to move those factories, down to Mexico. They're going to move other places in order to produce vehicles. So short term, the workers win. Long term, I think the workers lose, because the work is going to go away. And it's been going away for decades now in regards to legacy auto. There's a reason why, your car, go check it. If you own a legacy auto car, see where it was actually manufactured at, see if it was in the US or not. There's not a whole lot manufactured here as compared to what used to be manufactured here. So Anyways, hopefully this was helpful to you guys. And if you want to see all my buy and sells in real time, you want to see my watch list complete with price target for Tesla specifically and a bunch of other stocks, make sure you check out the pinned comment down there after you subscribe to the new channel and see everything that you get. You get access to 5 free courses, you get access to a stock analyzer tool, you get direct access to me, where we can talk through DMs. I do a live Q&A every week. I put out 3 to 5 videos a week to the group specifically there that we do meetups. We do all kinds of things like that in regards to the group. So make sure you check out the pinned comment down there and see if the membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.